There has been a surge of Southeast Asian listings on the HKEX this year. Is this a lasting trend or just a flash in the pan? Let's examine the recent developments, the key drivers, and the challenges that lie ahead. In the first half of 2025, the HKEX saw 43 IPOs, up from 29 in the same period last year and 27 in 2023. These listings raised a total of $49.2 billion US. This deal flow is a stark contrast to the anemic numbers in recent years. Only 3 Southeast Asian firms went public on the HKEX between 2021 and 2024. In the pre-pandemic years between 2015 and 2020, there were more than 65. What's driving the interest? Firstly, many Southeast Asian firms are keen on tapping into the vast Chinese capital markets. The Hong Kong exchange offers fungibility with the yuan, providing access to a broader pool of investors. Secondly, these companies are leveraging the familiarity of their brands in China to drive sales and growth. For instance, Thai coconut water brand IFBH is already seeing strong sales in China. Mainland Chinese investors are showing a stronger appetite for products from familiar regional brands. Thirdly, the HKEX offers relaxed compliance requirements, particularly for tech and biotech firms. This is evident in the recent listing of Singapore biotech firm Mirxes. HKEX's strategy towards ASEAN has been one of outreach and inclusion. In 2023, the HKEX added the Indonesia Stock Exchange to its list of recognized bourses for secondary listings. Last year, it added the Stock Exchange of Thailand to the list. Both moves followed high-profile roadshows in Jakarta and Bangkok. The bourse is making steady progress in penetrating the 2 largest economies in Southeast Asia. Its efforts are paying off, especially in the current environment where going global is the preferred strategy for companies. However, most of HKEX's recent listings are not new to the stock market. They are what we call cross-listings. This involves companies that are already listed elsewhere, such as Capital A, the parent company of AirAsia. It has announced plans to pursue a secondary listing on the HKEX. The bourse operator is focusing on luring companies that are already listed elsewhere to seek a secondary listing in Hong Kong. Of the 17 ASEAN firms currently dual-listed on the HKEX, 16 are from Singapore and 1 from Malaysia. Some have chosen to switch their primary listing from the SGX to the HKEX. Despite these developments, the HKEX still faces challenges in attracting quality listings from Southeast Asia. One major concern is the issue of low liquidity. In July, SGX-listed real estate firm LHN Group delisted from the HKEX due to persistently poor trading volumes and high compliance costs. Another challenge is the home bias among investors in the region. Domestic IPOs will always be the preferred choice for local investors. Not only are they more familiar with the regulatory environment, but they also enjoy strong support from sovereign funds like Temasek and Khazanah. In Malaysia, the weak IPO market in the region is not helping matters either. ASEAN IPOs hit a 10-year fundraising low in 2024. And in the first half of 2025, listings also underperformed compared with the same period last year. In contrast, the U.S. markets remain the top choice for Southeast Asian firms looking to go public. 6 companies from Singapore have chosen to list on the Nasdaq this year. Wall Street's appeal lies in its superior liquidity and valuations. Hong Kong is still viewed as a more cyclical and China-centric market. To sum up, the recent IPO surge is a positive development, but it's too early to call it a lasting trend. The HKEX still needs to work hard to convince more Southeast Asian companies to list. The bourse's success in attracting quality listings will depend on its ability to overcome the challenges of investor home bias, regulatory differences, and perceived limitations in terms of reach and valuations. That's all for now. Thanks for watching.